Pending home sales are up according to Redfin, and it's after the elections. Did you expect this? I wasn't too sure because the interest rates have been higher. Let's take a look at what Redfin has been saying just over the last few days. This was done November 27th. You can see here, pending home sales rise after post-election surge in home tours. Specifically here, U.S., I'm going to highlight this for you, U.S. pending home sales 12.1% up. Now, you take a look at where we're at and you take a look at rates. Let's take a look at rates for today. Today's December 2nd, and you have rates at around 6.91, right? Average. You go back to, what was this, November 6th, a day after the elections, rates went up. They started coming down a little bit, right? But what happened overall is the applications with the high rates, high sixes, low sevens, this is what happened. And this to me is the shock right here. Home mortgage purchase applications highest since February. What does that tell me? To me, it means that people, number one, we're just waiting for this election thing to be over. Happens every 4 years. They're like, hey, are we worried? Yes, we're worried. We're going to put a stop to everything we're doing as far as purchasing anything big. We're going to wait to see what happens. And now we're seeing, even though rates are in the, let's just call it sevens, people feel a lot more comfortable with that, saying, yeah, I feel good about where we're going to go. It's definitely better than where we were. Now, this is for the majority of people because interest rates are still high. And that means people are feeling good. Now, let's take a look at some more stats because I want to show you where we're at as a nation as far as properties and as far as what's actually happening. And it's still part of the Redfin report here by Dana Anderson. We're going to scroll down a little bit. I want to show you metro areas with the biggest year-over-year increase. So you've got, this is year-over-year November, right? This was done November 27th. So look at this, Philly, 21% up. That's nuts. That's the sale price. Newark, New Jersey, 17.1. Miami, surprised, right? Not all of Florida. It has an over increase of inventory. Cleveland, that's a surprise for me. Detroit, 12.7. Now, take a look at metro areas with the biggest year-over-year decrease. Tampa, not too bad either, -1%. You would think it might be more, but it's not. Now, pending home sales, these are the ones that are up. San Jose's significantly up. San Francisco's significantly up. A lot of people were surprised with those, and throw in New York. Pending sales down though. Miami, and look at these 3 Florida states. Is that a surprise for you? I think for some people it isn't. For some people it is. And then new listings. These are the areas that have a bulk of newer listings. We know that San Francisco has gone up because it was underappreciated because of all the problems they've had there. And then Austin is down a lot. We know Texas, parts of Texas have been hit pretty hard. But let's take a look at the nation and to see where we're at as a whole. I'm going to Altos Research right here. I always like looking at this for a little market snapshot in different areas. But you've got median list price, $428,800. This is nationally, right? If we take a look at this, I picked national, and this is as of today. Now, it's still a slight seller's market nationally, but again, real estate is regional, remember that. And if we take a look at days on market, we're at about 70 nationally. Now, I'm going to take a look at LA because I'm in LA, and I want to show you nationally, going back here, you got median list price, the list price, not the sales price, list price, $428,000. If we go to LA, the median list price is $1,300,000, right? I'm going to pick 3 areas just to show you. We're going to go LA, and then I'm going to go to Austin, just to take a look at Austin. And I want to take a look at Hartford, Connecticut, just to show you the differences, okay? $1,300,000 price decrease. We typically expect price decreases to come up with those homes that haven't sold through the summer. So it makes sense, right? Price decreases. And then median days on market, 2 months. What's the national? Here the national was days on market 70, so a little over 2 months. Now I'm going to take a look at I had Ventura County here, but I'm going to take a look at Austin, Texas, right? Let's take a look. Let's go to the national one instead. Let's go to this one. Let's go to Austin. And let's see what it gives us. Austin. By the way, if you don't have Altos research, I love it. Gives you really quick data. You can see right in the middle, it looks like it's not a buyer's market, not a seller's market, probably right slightly in the middle. Median list price, 685,000, much higher than the average national. Median days on market, a little higher, right? Remember we saw 70 being the average, and then price decreases. Look at that. That's still lower than they were in the summer, right? End of summer here at 60%. They're still at 54%. Prices are still, people are still dropping the prices on their homes for those homes that are listed. Now, let's take a look at Hartford, Connecticut, just to see. Remember the days on market, 84. Hartford, Connecticut. Let's take a look at Hartford. And I honestly didn't know there was East Hartford and all these areas. I'm just going to choose East Hartford. Remember, I am from Los Angeles. I'm uncultured. I don't know these areas. But the very first thing I notice is, holy cow. Look at this. It is a definite seller's market. That is high. The average price point here, $299,000 for list price. And then days on market, look at this, 42. That's a month and a half, right? Price decreases. All right, they're about the same there. But I'm looking at days on market. Things aren't staying very long there. In fact, let's take a look at what other area. Remember, I don't know the area first. Let's go to Hartford, Connecticut as a whole, right? And still a seller's market, slightly less as a list price, and price decrease about the same. Median days on market, still about a month and a half. Well, more towards 2 months, but still, when I'm looking at this and I'm saying, man, there's a lot of opportunity in these lower price point areas in the Northeast that's skyrocketing still in prices going up. But when I'm taking a look at pending sales, according to what Redfin is saying, it's very clear. One thing, people are confident as to what happened with the elections as a whole, right? Because they're speaking in the form of going and applying for a mortgage. Why? Because mortgage applications are up. Now, does it last? I don't know, because we've still got the unemployment numbers coming up. We've still got the actual whole inauguration, right, of the new president. We've still got all of these economic factors that'll come in with this whole new regime of people. And I think all of that, people are paying attention, and there's a lot of emotions flying. And if rates remain where they're at, I think we'll be okay. But if rates drop significantly to the low sixes, those pending sales are just going to skyrocket. And then prices are probably going to creep up even more in some areas. My challenge is that it's coming down to affordability. Like a lot of areas, I mean, Hartford, you saw East Hartford, average price point, not bad, right? And these are only single family residences. My challenge is that other areas where you saw even Austin being in the high sixes, and LA, you saw Los Angeles, average price point 1.2 million. That's crazy. For anybody to be able to afford these areas where first-time home buyers could come in and purchase, it becomes a lot more challenging. So I think this all hinges on rates, even though post-immediate election, pending sales are up, which shows some comfort in the current market, but we will see. Anyway, follow me for more real estate news.